All right, so um, we've got a pretty interesting one today.
Yep.
You've handed us a whole stack of financial documents on this company, Jungle Camps India Limited.
Indeed.
It seems they're gearing up for an IPO.
Looks like it.
So let's dive in,
Yeah, let's take a look.
see what we can uncover.
Definitely.
First off, what exactly does Jungle Camps India Limited do? I mean, the name kind of gives us some clues, but
Yeah, you're right. It's not just about camping in the jungle.
right.
They actually operate a series of luxury wildlife resorts.
Okay.
So think, high-end accommodations,
Mm-hmm.
personalized service curated experiences
Interesting.
in some of India's most stunning national parks.
So a bit of like glamping with a touch of adventure.
Exactly.
Where are these resorts located?
Primarily in Madhya Pradesh and Maharashtra,
Okay,
known for their rich biodiversity and tiger populations.
makes sense.
They have properties near popular national parks like Pench and Tadoba.
Yeah, those are prime wildlife destinations. Now, the documents mention that they were originally called Pench Jungle Resorts Private Limited.
Hmm.
What's the story behind the name change and this whole IPO business?
It seems they've gone through a bit of a transformation.
Okay.
Established back in 2002.
Okay.
They operated for over 2 decades as Pench Jungle Resorts Private Limited.
Wow.
Then early this year, they changed their name to Jungle Camps India Private Limited,
Hmm.
possibly to reflect their expansion beyond just the Pench region.
So the name change signals a broader scope.
Yeah, you could say that.
And the IPO, what's driving that decision?
Well, going public allows them to raise capital for further expansion.
Right.
It's a common strategy for companies looking to grow rapidly.
Makes sense.
And they're aiming to increase their room inventory significantly,
Oh, wow.
from 87 rooms to at least 257.
That's quite an ambitious goal.
Yeah, it is.
Any specifics on where this expansion will take place?
They've mentioned a few interesting projects.
Okay.
There's talk of a heritage hotel in Shibpur Fort, which could attract a different type of clientele,
Right.
interested in history and culture,
Okay.
and a new property in Sanjay Dubri National Park
Okay.
would further expand their footprint in Madhya Pradesh.
So they're diversifying their offerings and tapping into various niches
Yeah.
within the tourism sector.
Exactly.
But what about their current financial performance?
Yeah.
Are they in a strong position for this IPO?
Well, let's delve into the numbers.
Okay.
Their revenue from operations for the fiscal year ending March 31st, 2024 was 1,748.82 lakhs.
Okay.
And their profit after tax for the same period was a healthy euro 359.16 lakhs.
Those figures sound promising,
They are.
but what's the bigger picture?
Yeah.
Have they been consistently profitable?
What's noteworthy is the significant increase in both revenue and profitability compared to previous years.
Okay.
It seems they found a formula that works and are capitalizing on the growing demand for experiential tourism.
That's encouraging to hear.
Definitely.
Now let's talk about this IPO in more detail.
Right.
How many shares are they planning to offer and how will they be allocated?
They're proposing an initial public issue of up to 40,086,400 equity shares, each with a face value of 82,000.
Okay.
The final issue price will be determined within a price band,
Got it.
details of which will be available in the Red Herring Prospectus.
Okay, so for those of us interested in potentially investing,
Yeah.
where do we fit into this picture?
Well, they've reserved a portion of the shares for different investor categories.
Okay.
A minimum of 15% is reserved for non-institutional investors and 35% for retail individual investors like you.
That's good to know.
It is.
What about institutional investors?
Yeah.
Are they showing any interest?
Absolutely.
Okay.
They've also allocated a portion for qualified institutional buyers, including mutual funds,
Interesting.
which suggests they are looking for serious institutional backing.
So it seems like they're taking all the right steps to attract a diverse range of investors.
Yeah, seems like it.
But before we get too excited, let's flip the coin and talk about the potential risks involved. Sure.
What are some of the challenges they highlight in the documents?
Every investment comes with its own set of risks, and Jungle Camps is no exception.
Right.
One of the primary concerns is the cyclical nature of the tourism industry.
Right.
Their business is heavily influenced by factors like seasonality,
Yeah.
economic conditions, and even things like unforeseen events or negative publicity,
Makes sense.
which can impact travel patterns.
That's definitely something to consider.
For sure.
Are there any other red flags potential investors should be aware of?
Well, they're heavily reliant on their senior management team.
Okay.
The expertise and leadership of individuals like Mr. Gajendra Singh,
Right.
the managing director, are crucial to their success.
Makes sense.
Retaining this talent in a competitive industry like hospitality is always a challenge.
Losing key personnel could definitely impact their growth plans.
Yeah, that's true.
Anything else that stands out in terms of risk?
They also mention their dependence on a limited number of properties and leases for their operations.
Any disruption to these agreements, be it natural disasters, regulatory changes, or disputes with landowners, could significantly impact their revenue streams.
They're putting a lot of eggs in a few baskets, so to speak.
Yeah, you could say that.
And of course, they're operating in a competitive landscape.
Right.
How do they stack up against other players in the luxury wildlife tourism segment?
That's a key question.
Yeah.
While they have a strong reputation and a unique selling proposition, they face competition from established players in the hospitality industry,
Right.
both domestic and international.
Okay.
Some of these competitors have deeper pockets, wider brand recognition,
Okay.
and a more extensive network of properties.
So they'll need to stay agile and innovative to maintain their edge.
Definitely.
What about their financials?
Yeah.
Are there any areas of concern there?
While their recent performance is positive,
Okay.
they're not immune to financial risks.
Right.
They operate in a capital-intensive industry, requiring significant investments in property, equipment, and maintenance.
So managing their cash flow effectively and making wise investment decisions will be crucial for their long-term sustainability.
For sure.
Anything else investors should be wary of?
There's one more detail that caught my eye,
Okay.
and it's a bit of a mystery.
Uh,
The documents mention that some of their corporate records from before 2006 are missing, and an FIR was filed in 2021 regarding this issue.
That's certainly unusual.
Yeah.
What are your thoughts on this?
It's hard to say without knowing the full context.
Right.
It could be a simple administrative oversight,
Okay.
or it could signal something more serious. It's definitely something potential investors should dig deeper into
Okay.
and seek clarification on.
Good point. It's essential to do your homework
Absolutely.
before making any investment decisions.
Yeah.
So far, we've covered a lot of ground.
We have.
The company's background, their expansion plans, their financials, and some of the risks involved. But I'm eager to delve deeper into their numbers.
Okay.
What can their balance sheet and other financial statements tell us about their financial health
Yeah.
and their preparedness for this IPO?
That's where the real analysis begins.
All right.
Let's move on to part 2 of this deep dive
Sounds good.
and examine their financial performance in more detail.
I'm ready.
All right, so now we're going to roll up our sleeves
Okay.
and dig into those financial statements you've provided.
Let's do it.
It's one thing to talk about revenue and profits in general terms,
Right.
but the real insights are hidden in the details.
Okay, let's get down to business.
All right.
Where should we start? I always find balance sheets a bit intimidating.
Yeah, they can be.
All those numbers in technical terms?
Yeah.
It's a lot.
Don't worry, we'll break it down in a way that makes sense.
Okay.
Think of a balance sheet as a snapshot of a company's financial position
Okay.
at a specific point in time.
Okay.
It shows what they own,
Okay.
their assets, what they owe.
Liability.
Yeah. And the difference between the two, which represents the shareholder's equity.
Okay, that helps.
Good.
So what jumps out at you when you look at Jungle Camp's balance sheet?
As of March 31st, 2024, their most significant asset is their property, plant, and equipment,
Okay.
which totals 2,019.94 lakhs.
Wow.
This makes sense considering their business model revolves around owning and operating these beautiful resorts.
Makes sense. Those prime locations, the luxurious amenities.
Yeah.
Those all come at a cost.
Exactly. And they're not just sitting on their existing properties.
Okay.
They have 155.59 lakhs listed as capital work in progress, indicating ongoing investments and expansion projects.
That ties in with their ambitious growth plans we discussed earlier.
It does.
It seems they're putting their money where their mouth is.
Yeah.
But what about the other side of the equation, their liabilities?
Right.
How much debt are they carrying?
That's a key question for any potential investor.
For sure.
Their borrowings, both long-term and short-term,
Oh.
are relatively modest compared to their assets.
Okay.
They have non-current borrowings of 25.67 lakhs and current borrowings of 224.02 lakhs.
So they're not overly reliant on debt financing,
Right.
which is a good sign, right?
It certainly suggests they're managing their leverage responsibly.
Okay.
Less debt generally means less financial risk.
But it also could mean they're being overly cautious and missing out on opportunities to grow more aggressively.
That's a valid point.
Yeah.
It's all about finding the right balance between risk and reward.
Right.
Now let's move on to profitability.
Okay.
One metric that's often used to assess a company's operating performance is EBITDA,
Okay.
which stands for earnings before interest, taxes, depreciation, and amortization.
Okay. I've heard of EBITDA, but I'm not entirely sure what it tells us.
Right.
Can you break it down?
Essentially, EBITDA strips away non-operating expenses like interest and taxes
Okay.
and focuses solely on the profitability generated from the company's core operations. It helps us compare companies across different industries and tax structures.
Got it. So what does Jungle Camp's EBITDA look like?
For the fiscal year 2024, their EBITDA was 165.71 lakhs,
Okay.
resulting in an EBITDA margin of around 9.48%.
Okay.
While this is a slight decrease from the previous year, it's essential to consider the context.
Okay.
This period included the initial phase of their Bison Highway retreat,
Right.
which, as we discussed earlier, faced some challenges.
Ah, yes. Those issues with the NHAI signage and access,
Right.
those early hiccups probably ate into their profits.
Precisely. But despite these hurdles,
Okay.
they still managed to maintain a decent EBITDA margin.
That's good.
Now, let's not forget the bottom line.
Yeah.
Profit after tax, PAT.
Right.
This is the ultimate measure of a company's profitability,
Okay.
after accounting for all expenses and taxes.
So how did they perform on that front?
Their PT for fiscal year 2024 was 359.16 lakhs,
Okay.
representing a PZ margin of around 20.54%. This is a significant jump from the previous year,
Okay.
indicating a strong recovery in their profitability.
Wow. That's impressive. They're clearly doing something right.
Yeah, they are.
But we can't just look at one year in isolation.
Right.
What do the long-term trends tell us?
That's an important question.
Yeah.
Looking back over the past 3 years,
Okay.
we see an upward trend in both revenue and profitability.
Good.
They've managed to weather the storms, adapt to changing market conditions, and grow their business.
So they're not just riding a temporary wave of success.
Bro.
They're demonstrating a consistent track record of growth and profitability.
Exactly. But remember,
Yeah.
analyzing financial statements requires looking at the whole picture.
Of course.
EBITDA and PAT are important,
Right.
but they don't tell the whole story.
What else should we be focusing on?
We need to delve into their cash flow statement.
Okay.
It provides a different perspective on their financial health
Okay.
by tracking the movement of cash both in and out of the company.
Okay, let's dive into that cash flow statement and see what we can uncover.
Right.
All right, so we've looked at Jungle Camp's balance sheet and their profitability.
Right.
But I'm curious about their cash flow.
Yeah.
Can you explain why that's so important, especially in the context of this IPO?
Yeah, you're right to focus on cash flow.
Okay.
A company can be profitable on paper, but still face difficulties if they're not managing their cash effectively.
Makes sense.
The cash flow statement tracks the actual movement of cash both in and out of the company.
Right.
It tells us how much cash they're generating from their operations, how much they're investing, and how much they're financing through debt or equity.
Okay, so it gives us a more realistic picture of their financial health.
Yeah.
What does Jungle Camp's cash flow statement reveal?
For the fiscal year 2024, they generated a net cash inflow from operating activities of 452.35 lakhs.
Okay.
This is a positive sign.
Good.
It means their core operations, the resorts and the experiences they offer, are generating more cash than they're spending.
That's good news.
It is.
But they're also planning significant expansion,
Right.
which will require substantial investment.
Yeah.
How does that impact their cash flow?
Yes, their cash flow statement shows significant cash outflows related to investing activities.
Okay.
This includes their investments in property, plant, and equipment, as well as their stake in Versa Industries, the crockery supplier.
Right. We talked about those expansion plans.
We did.
And their strategy to potentially control costs and quality through vertical integration.
Exactly. While these investments are necessary for future growth, they do consume a lot of cash.
Right.
So it's crucial to assess their ability to finance these activities without jeopardizing their financial stability.
How do they plan to manage that balancing act? Are they taking on more debt to fund this expansion?
Their debt-to-equity ratio, which measures the proportion of debt used to finance assets, is currently at 0.20.
Okay.
This indicates they're not excessively reliant on borrowed funds, which is a good sign. It suggests they're striking a healthy balance between using debt and equity to support their growth.
Okay, so they're not over-leveraged.
Right.
What about their ability to manage their short-term finances?
Yeah.
Can they cover their day-to-day expenses and meet their short-term obligations?
That's where working capital management comes in.
Okay.
Their current ratio A measure of their short-term liquidity stands at 1.28.
Okay.
This suggests they have more than enough current assets to cover their current liabilities,
Okay.
indicating a healthy working capital position.
So they're in good shape to handle their short-term financial needs.
They are?
It seems like they're managing their cash flow quite well,
Yeah.
investing strategically for the future,
Yes.
while keeping a close eye on their debt levels and short-term liquidity.
Indeed, they're demonstrating financial discipline, which is reassuring for potential investors.
Yeah.
However, let's not forget the elephant in the room.
Oh, yeah.
Those missing corporate records from the early 2000s.
That's right. While it doesn't necessarily mean something is wrong,
Right.
it's a piece of the puzzle that investors should definitely investigate further.
Absolutely. Transparency and a clean track record are essential, especially for a company going public.
Yeah.
It's worth digging deeper into this issue and understanding the circumstances surrounding those missing records.
So to wrap things up, what's the overall takeaway for our listeners?
Yeah.
Should they jump on board this IPO or proceed with caution?
Jungle Camps India Limited presents a compelling investment opportunity.
Okay.
They're tapping into a growing market for experiential tourism. They have a strong financial track record with consistent growth and profitability.
Right.
And their management team seems capable and experienced.
But there are also risks to consider, like the cyclical nature of the tourism industry, their dependence on a limited number of properties, and the unresolved issue of those missing corporate records.
Precisely. It's all about weighing the potential rewards against the inherent risks investors need to do their due diligence, carefully analyze all available information, and perhaps seek advice from a financial expert before making any decisions.
Excellent advice. It's always wise to be informed and approach any investment opportunity with a healthy dose of skepticism. Thanks for guiding us through this financial jungle.
You're welcome.
I feel like I've learned a lot about jungle camps and gained valuable insights into analyzing a company's financial health.
It's been my pleasure. Remember, knowledge is power, especially when it comes to investing.
So true.
Stay curious, stay informed, and always be prepared to dig a little deeper.
Great advice. Thanks for joining us.
Thanks for having me.